Good afternoon and welcome back to Lunch at the Market. Medical device makers continue to be an area that we are looking for places to put capital. One of the names on our hot list, Mend, M-E-N-D, just got a bid from Johnson & Johnson yesterday. So we'll be doing some more work this week to see if we can identify the next takeover target, as we don't think the consolidation in this space is done yet. Reimbursement rates being slashed have crushed some of the device makers, Beat for instance, but a larger company like Johnson & Johnson can buy a company like Mend and not have a device side be their entire business model. Today we couldn't resist taking advantage of the panic in the markets this morning and sold some put spreads. We sold the Visa July 75.70 put spread this morning. That means that if Visa finishes above $75 a share by Friday, then we get to keep our credit. They managed to break $75 with 3 days left, then we'll simply roll down and out. That's where we buy back what we sold today on Friday before the close and sell the August 70.65 put spread for another credit, all in one trade. Not sure how this platform works for you, but Trade Monster makes it extremely easy to adjust your trade like this. One other big trade today was to sell Apple July 140-130 puts for over $1 per spread credit. The premium was just too big, and Apple was down $10 at the time, so looking for another $7 on top of that in 3 days just seemed like a lot to ask for. Stocks usually overshoot to both sides, so we took advantage of the overshoot on the downside to sell the put spreads that will expire in 3 days. Not a whole lot of work for 3 days, and we'll do the same move, roll down and out, if this one goes against us. But so far today, Apple has already bounced $3 from the lows. We get closer where we're at today, that leaves 3 days for $10. Even if Apple slides $3 a day, we're still safe on Friday. Worst case, we'll have the choice to buy back the spread for much less than we collected to theta. That's the Greek word for time decay, or what an option loses each day as it gets closer to expiration. Other than that, we may buy back some of the calls we sold against our stock, as earnings season is finally here and the rally that we've been looking for seems to be on. We'll be selective with that. Most of what we have sold will stay that way, and we'll look to redeploy the cash elsewhere if we're called away. I know periodically John Najarian likes to have his entire book called away and start fresh the next month. Not a bad idea if you're a trader. It's not practical if you're investing to start completely over, as transaction costs on that kind of clear can get up there. It's better to manage your core positions, cut out what you don't want to own, and trim your winners on the way up so that they don't take over the portfolio and leave you overexposed in any one area. Thanks for tuning in again today. Sorry about yesterday's show, just too much going on. We'd love to hear some feedback from everyone, as Jared Levy is now moved to the second place behind James Altucher for our favorite episode of America's Favorite Trader. I don't think the bots, those little programs that Apple wrote to go around gathering data, have swept over the Brian Kelly or Anthony Scaramucci episodes of America's Favorite Traders yet. We'll keep you posted when we see it change. Be on the lookout for new episodes coming up, as Brad returns from California this week and has some great guests booked for the show. Don't forget to visit the blog and check out the 3 new articles written in the past week about PE valuation, Best Buy and Blockbuster, video, and financial television. Have a great day, everyone, and we'll see you tomorrow.